Hey, hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the week, previous week, what happened in the market, and what we can learn from it and how we can plan for a better trade for the next day. And this is an analysis for the week that's starting from tomorrow, Monday, December 5th, 2022. Let's straight away get into the charts and see what happens. This is weekly chart of Nifty and the Banknifty that you're seeing. A wide range bullish candle. That's what this week that went by shows, and Banknifty also shows green candle. It's almost like an inverted hammer, but definitely bullish as it has closed above the previous weeks. But the Banknifty has closed below the previous week's high, but Nifty has closed above that, right? So what else can we infer from it? This is another view of the weekly. Here we can see that the breakout and the trend line channel is already confirmed here, and Banknifty also the resistance on the rounding pattern resistance, trend line resistance is also it is a reconfirmation, double reconfirmation or triple reconfirmation of the breakout is what is seen here, right? That's what is happening on the medium term or the weekly basis. Now looking at the daily charts, right, the short term charts are showing that the last 2 days of the week had a retracement. A good enough of retracement has happened, and also Banknifty has managed to bounce up also a little bit, as a green is seen here. So it was a good correction, but is this correction enough or not? We're not sure, but there is a chance for a CIP bounce up from here. It's not confirmed, but the potential for a bounce is there. CIP is change in polarity, where the previous resistance will act as support and price bounce up from there. So this retracement is actually good. Would this extend to further retracement to the next support zone somewhere in this 18,400 zones? That is only it's not predictable, and it's only possible if there is a price is moving below the previous day's candle low. Only then we can get any confirmation of that. Similarly, as of now, Banknifty also shows a change in polarity bounce possibility. Look at the Bollinger Bands. The price was walking on the bands. Definitely, the expansion of the Bollinger Bands is on the upside on both indices, but it has fallen off from that. But still, it's quite far from the median or the 20 moving averages. Same with the Banknifty. Expansion is seen, but a small bend has taken. But that is quite natural. It has happened multiple times and not sustained, and then price moves up and the bands also expands. So small bend has happened, but otherwise, if you see the bands are expanding on the upside, which is saying that future days also the price is expected to move further up. That's what the Bollinger Bands or the volatility indicator is telling us. Let's just see the numbers. Like 185 points. It's a 1% gain that has happened in Nifty, while just a mere less than 0.3% is what happened. What has gained the Banknifty? So just 100 points gain has happened. 100 points plus 70. Around 17 points gain is all that happened in the Banknifty, because it had already made the all-time high prior to the Nifty. But Nifty has overtaken now, and it has also broken out and then made a new all-time high, and then 1% of move. That's Nifty is performing better, right, as of now, and that's what the weekly basis is shown. So for short-time highs on both indices. Short term, if you see, Friday was also a down day. Nifty lost 116 points and 157 points lost. That's 0.36% of the Banknifty, right? Small bearish candle is what you see on Nifty, right? And again, a small body green candle is what you see on the. We have seen that Bollinger Bands also. We have seen that. Let's move ahead. So resistance support levels. This is the daily charts that we're seeing. First support downside would be 18,500 levels. This is the previous swing low, and then after that you have 18,442. That's the previous swing low again. After that you have 18,262. Then comes the gap support at 18,100. Similarly, upsides it's this 4-time high first at 18,887. First resistance upside. Then you have the rounding number 19,000 resistance, which is also a Fibonacci 17% Fibonacci extension, if you see. Right. So those are the resistance upside. After that, it's all-time high. We can go up anywhere, but the major hindrance would be at 19,000 if the market is running up. Similarly, downside, every swing lows, supports can 18,500 if it is breached, then we have trouble. 18,400 if it is breached, we have more trouble, and after that, you have serious troubles. Right. And if this 18,100 is a previous swing low, if that is breached, then we have to be really be worried about it. Until then, it could be considered as this normal routine correction that may be had, but I don't think the market is going to move up to that level. Maximum it may go to the 18400 levels, and then it will work for hitting the 19,000 all-time high levels, right? That's the support resistance on the Nifty. Bank Nifty similarly, you can see that resistance above first resistance would be the all-time high that it had made 2 days back at 43,515 levels, and then after that you have the rounding number 44,000 and then 45,000. Downside, the supports can be seen at a Fibonacci 38 Fibonacci extension level at 42,622.75, and then after that you have 42,202, and then 41,840 and 41,640, which is also a previous swing low and a gap support, not a gap resistance, it's a gap support, right? So that means the price can move and take support at this zone at 42,600, and then if that also breaks, then you have 42,200. That also breaks, you go to 41,800. That also, then you have 41,643. Right. The worst case scenarios, it can further fall down to the 40,500 zones, and after that you have real trouble. But Nifty definitely is not going to that. This is only a small pullback after a substantially good up move that has happened. There is a confluence of a trend line also. If the trend line is breached and it goes below the 42,600, then we can probably say that we have more correction that may be coming. So upside resistances we already see. So that's Bank Nifty support resistance levels. Let's get into and see the momentum and the trend indicators in Nifty and Bank Nifty. This is the weekly charts of the Nifty and the Bank Nifty that you're seeing on the top and the bottom on the left side. Right side you have daily charts and short-term charts, Nifty and the Bank Nifty on the right side. So Nifty, definitely the momentum is on the bullish zones above RSI 60, and Bank also is showing RSI 60. So the medium term bullish. Now short term it's also bullish because RSI 60 above is where the indicator of is showing that there is bullish momentum divergence that is seen on the Nifty, right? And that could mean that the price may take the support of moving average on the RSI and then for the bonds. So bullish divergence is there. In the case of Nifty, short term, right? But overall, the bullish momentum is what you can see, right? That's what you get, right? Bullish divergence is on the Bank Nifty. I'm sorry about that. Sorry. Bullish momentum is seen on the Bank Nifty, but the price is moving down, moving up, and overall from the previous swing low, price is moving down and the momentum is dropping. So this could be a positive reverse divergence, which is not exactly bullish divergence, but a positive reverse bullish divergence. But anyway, it is expected to move further up. So that possibility is there in the Bank Nifty, so it justifies to what pullback that has happened on the Bank Nifty. Right? So momentum and trend, momentum is bullish. Now trend indicators that we are using is ADX, that's also bullish and rising in the medium term. So medium term, the trend is rising up. So bullish on DMA positive sounds, but in the short term, last week had a pullback, so point has dipped, but still it is above in the bullish zones itself. There is no crossover that has happened. Still in the bullish zones, small bend or small momentum dip has happened. That's all. So momentum and trend bullish on both short term and the medium term. In the case of both the indices, Nifty and the Bank Nifty. That's it. Moving again, next parameter that we are going to study on the chart is volatility in the open interest analysis. Volatility is in the VIX is a sentiment indicator, which shows the greed and the fear in the market, right? So that went up slightly up 1%. Flattish close is what happened, and it has been dipping for so long time, as you see in the chart on the right side. And it's 13.5 close the line. That means it's very favorable in the case of option traders and derivative instrument traders, because market choppiness is likely to be less as compared to big mega choppiness that can happen if it is above the 20. So that way it's good, but now that it has reached a very low level of 13, and further maximum that can happen is it can go to 10, another 3 points. So it's at the bottom, so there is every chance that there is a mean reversion spike up can happen. So possibility is there because volatility is a mean reverting nature, right? So that's about the VIX. So volatility has cooled off, which is good, which just shows that the market can be bullish. But there is a word of caution also there, because this means now that it has reached a very bottom level or something. Now open interest of the futures is showing that it's a long unwinding, which is bearish, which means that it's not long build, it's not short build up, but it is fully bearish. It's like the fear has come in, and the Nifty people who have gone on long now are shorting it and unwinding the long positions. That's what was seen from the 2 days of Thursday and Friday price action, right? on the both indices. This is what is happening. So that's kind of bearish. Open interest futures is bearish. Now for the 8 expiry options weekly expiry options open interest data. We're talking about futures open interest data. Now option open interest data. Put call ratio is the one thing that's not bullish enough, but it's not bearish either. 0.70 and 0.71 is what Nifty and Banknifty put call ratios are there. The levels, what do they say? It's very interesting here. Look at the range. Look at how bullish the people are buying. The option writers are especially. Nifty shows 18,700 as the highest put writing place, and 19,000 was the maximum call writing distance. So that's why the support resistance, that's for the open interest data for the weekly expiries there. Now the next level of support and resistance is at the put writing at 18,000 and call writing at 18,800. So similarly, 43,000 is just kind of for both put writers and call writers both have to a maximum at the same point, 43,000. So that's going to be very key. But there are 4 days more for the expiry, so many things can change in the open interest levels as per the option. So that as of now, this is what the level set. 40,000 and 43,500 is where the highest put and call rating. After the second highest put and call rating is seen there. PCR and is not bullish enough, and then futures wise bearish is what we see for the weekly expiry. But yeah, but the support resistance of both indices are showing that it's it's not that bearish, right? Neither is it too bullish, right? The range is, I don't know, hardly 300 points where the support resistance is there for Nifty, and just triangle that is there on the 43,000 at the Banknifty, right? That's what you'll have to correlate these levels with what levels that we have on the charts, on the support resistances that we had found earlier. Correlate with that and then come out with the places where you may expect probability of maximum resistance and maximum supports that can be found, and then accordingly go long or short. That's what we probably do, right? Now moving ahead, let's see how the sectors, different industrial sectors, that constitute the Nifty 50 or different sectors, how do they perform? Let's analyze that. So it was a comeback week, of course. Last week was where it actually broke out. Nifty broke out and made new all-time high the first time last week. Banknifty had done it earlier, but last week the IT sector broke out 2.3% up, metal 3.7% up, right? Pharma 1% up, auto also nearly 1%, 0.7% up, FMCG 2.4%, and Triple Reality 4% up. So it was a breakout week. All the sectors moved up, but with respect to the momentum, it is a metal and the FMCG which is bullish on both time frames of medium and short term. So that's where we can confidently enter long positions. Other sectors, medium term has to catch up or short term has to catch up. That's how it is. So either of that is not bullish enough with respect to the momentum. IT sector is bullish on the short term, but long term or medium term weekly charts are not showing momentum above the RSI 60 yet, right? So IT sector will have to wait, auto sector also will have to wait, pharma will have to wait, reality also will have to wait. Although it is super bullish 4% move that has happened, still the medium term charts or the weekly charts are still showing the momentum RSI indicator sideways, not above the RSI 60. We'll have to wait. So what we can where we can go along is clearly metal and the FMCG, which have both time frames having the bullishness in the momentum perspective. Let's move and see the charts. Let's move and see the charts once again. Right, sector, IT sector on the top, you can see that it is at resistance. It has climbed almost into the at the resistance zone, just getting into the bullish zones. So next week it will be clear indicator on whether it will actually take out resistances and then hit the another resistance that's above that or not. Right? We'll have to keep a close watch on that. There's direct dependence on the Nasdaq is there, so we'll have to keep the US markets also in your market watch. Right, the metal indicator is it had corrected substantially, and then the bounce has happened, small pullback, and it has taken out the resistance now near the all-time high levels. Definitely climbed to the bullish zones on the RSI on both time frames you see. What also is about breakout of the rounding pattern. It has climbed back to the bullish zones on the medium term, and some celebration on the top is seen. This is a pattern breakout as you will see. So yeah, we'll have to wait some more. Pharma is also, we have a resistance upside, momentum is sideways, we'll have to wait. FMCG has done well, and you can beautifully, we can see that it has taken a range shift of momentum to the bullish zones and has not been losing that momentum on the RSI above 60 and has been hovering around that, taking support of the RSI 60, and that's clearly bullishness, right? Strong support is there. Reality has a very good week, but momentum is climbing to the bullish zones from the weekly time frames. Right? Now let's look at how the index heavyweights, now the Hrithik stock, the 5 stocks. HDFC Bank clearly consolidating a resistance zone, we can see that, right? I'm mention the bullish also the medium term, but this price has to break out of this level of 16,036 above that, right? Then again you have a resistance at 17,026. So a lot of resistance on the upside right now. For the last 3 weeks consolidating, stuck there, but bullish. HDFC also consolidating for the last 3 weeks. It's already in the bullish zones. Reliance has been the star performer the last week. Actually, it's in the Boston kind of movement that is happening up and down since several months now. There 2022 is a zigzag up and within a rectangle box, but momentum is just managed to climb into the bullish zones on the medium term. So let us keep a close watch if it is able to break out of that all-time high level or not. Right. Again, Infosys, strategy stocks are doing good. A beautiful W pattern breakout, but it's a gap resistance, it's a very strong resistance. Momentum has climbed the bullish zones, but just have to be cautious and see whether it's able to take out the resistance or not. Till then, we have trouble. TCS just at the prime of getting into the bullish zones, successfully taking out the resistance 1 and heading higher after a breakout from a parallel trendline channel. ICICI Bank definitely bullish, but selling pressure is seen all-time high that zone. It has hit multiple times now and unable to close above that in the green. But definitely momentum is bullish in the medium term and trend is also bullish. Kodak has been zigzagging and the same thing that it has been doing since several months, probably years. Last 2-3 years it is doing nothing but moving up, down, up, down, up, down. That's the same thing it is doing. It's almost on the top. And unless and until this resistance on the top is taken out at 2089 and nothing in 2080, that levels, if that is the green close have weekly close, that's what happened about that. You have no hope. You may be able to trade by selling at the top and then buying at the bottom, so that may be possible, but trending up has not happened. It may be a long wait before it happens, but otherwise momentum is in the sideways zones after briefly touching this RSI above 60 bullish zones for some time. Just dipped in the sideways zones, right? That's what's happening on the Kodak Bank, ICICI Bank. So overall, if you see the heavyweights, there is definitely bullish on all the heavyweights. That's not out about it. The best performer is probably ICICI Bank. ICICI is also doing good, but it just had to break out of that. Right? Reliance also is good, but it just had to break out of that all-time high and close above that. Right? IT stocks is doing good, but in fee, look at that. It just had to take out that gap resistance, right? So it's all bullish, but at resistance, crucial. Yes, that's it with the heavyweights. Now, what do we analyze next is institutional participation. Like Fyers are buying 9,835 crores in last week in the cash market, and DIS we're probably looking at 1,333 crores of selling happened for DIS. When Fyers have done mega buying last week, one day 9,000 crores of selling was a recent highest ever. In the recent times, the highest. At least I have not seen any buying of 9,000 in the recent times by the Fyers single day. But overall, they very next day they sold 1,500 crores. But net to net in a week in the cash, they had bought 9,800 plus crores. That's huge money that is flowing in the Indian market. So it's confidence, and that's why the market is moved up. Now the derivatives portion also FIDs have moved down last week, basically. So not that great, but institutional participation good, with respect to the markets. So that's positive. Move on. The next section that we analyze is the global markets and the global commodities. Let's look at the currency. Dollar index has dropped 1.5% of fall has happened. Now it is overall correction is around 9% from the top. 104.5 is very low as compared to the 120 kind of levels that we were talking about few months back. Now still it's not too far from there. Right? Momentum is at least slipping sideways, and that's good. So dollar has cooled off a little bit. You can see that on the chart on the top. Look at the 9% fall that has happened. Now it's at a neckline. So there's a very less chance that it can breach this and go further down. If that happens, then it's good. But it may not happen. At least it may be consolidating at this level or maybe spiking back up to the previous levels, right? But this is a neckline of the rounding pattern. So there's a very chance that it can hover around this one for long. Momentum has slipped to the sideways, you can see that. Right? So that's the charts that you see down here is the USD and our currency pair. That also has cooled up, but not much. 0.30% down. 3.5% is the marginal correction from the top. That is not much, but There is a trend line channel there. If that is breached, then you have some hope that it can go up below the 80, but until then we have trouble. 81.4 still where it's still rupees the weekend level, so that remains a trouble there. But dollar cool up is good. Next is used markets. Look at this. This is Dow Jones. This is the S&P 500. This is the Nasdaq on the top, and on the downside you have the S&P 500, US 500. Right. Now you can clearly see that the Nasdaq is at the resistance of a trend line as well as the previous resistance. Here also the S&P 500 is also at resistance channel top, just breaking out, but you have immediate resistance on the top. So momentum is sideways on both on the medium term, right? But look at Dow Jones. It is actually broken out. Right? A pin bar is seen, closed, managed to close above the resistance, so broken out of the trend line channel, bullish, climbed to the bullish zones. But these two indicators, the S&P 500 and Nasdaq, is still struggling with the resistance. That is something that you have to keep a close watch, because US markets, big crashes happens, reversals from the top of the channel to the end of the channel. Then we may have trouble on our side also. Mostly we are resilient. We have been showing resilience right now. Sometimes when 500 point fall also we don't react. 700 point also we don't react. Sometimes, but not always. Most likely we react badly or the same line. In the same line, it's either up or down, because it's a mother market. Right? So US markets has closed up actually. So it is kind of flat, was 0.2% only. It is short green. That's down, but others have 2%, and Nasdaq up more has happened. 1% up more, less than before has happened. So last week, if you see, it was the Dow who had already taken out the resistance. Was what was consolidating last week, but while others were catching up, the S&P and the Nasdaq was catching up last week, but they still have the sideways. They're not climbing to the bullish one, but Nasdaq is Dow Jones has already done that. So you have to keep a close watch again. Now the next one is the commodity crude oil. It's very crucial. It is cooled off, but it is cooled off enough. You can see that it is cooled off from the top. Very good correction of 11% or something has happened, and it is cooled off. It had gone in fact to below 77 or something last week, but not sustained that. This week it again spiked to 5% up, and it's 80 above now. Still it's okay, as long as it's below the 100, it should be fine. And it's in the channel top, so it can climb back to channel. It is in the channel bottom, so it can climb back to channel top again. Now the momentum which was in the bearish zones, which is good, gold was crashing, but now it has climbed back to the side, so it will sustain the sideways or fall back in the bearish zones. So we have to closely watch. But crude being down and cooled off is good for our markets. Right? We have a lot of dependency on oil imports. Gold, next commodity which is used as a hedge instrument. You can see that the gold has crashed down and channel. The cup and handle. The handle formation is what is seen here in the weekly charts. The handle bottom was found and then it bounced beautifully from there and taken out the resistance. And now it's managed to hold on to this resistance from where it slipped a few weeks back. Right? It is rising sideways, but still rising towards the bullish also. So gold is trying to catch up to the channel top, at least to 195. So again it can climb back if it's able to close above this the green one more week. But definitely there are resistances upside, but we know that at least the direction where it is heading towards. Right? So gold has very slow moving, always sideways kind of instrument, but it's very important to watch that, because it's a hedge instrument. When the market is going down, gold is likely to move up. So keep a close watch of that. So that's it. To summarize, you can see that the dollar cool off has happened, which is good. Crude cool off has started turning back, but still it's okay. Gold is trying to hang on to the after the fall recovery. But US market is something. There's also green close happened last week, positive, but at resistance you have to be careful. So to keep a close watch, basically, as to big moves are happening or not. That's all. Now, two stock picks from the next week. It's Bharat Heavy Electricals long and United Spirits long. Festive mood United Spirits charts. If you see, it's a cup handle formation, and the handle is broken out, and very good chance that it can go to the 999 levels, definitely, because the breakout is already confirmed. Good risk reward, and stop loss can be at the neckline of the grounding pattern, definitely. Right. Similarly, on the Bharat Heavy Electricals also, it is given a green close, solid wide range bullish green close after a range shift at another momentum indicator RSI trend also up. So momentum trend is up for both the stocks. So good, short swing trades can come in both this Bharat Heavy Electricals and United Spirits. Moving on, there is the index play. This is option strategy, which is a calendar spread. Actually, it is a peer put calendar spread where you're selling a higher put. Actually, not a higher put, a lower put at the selling inside, and a higher put for the far month buying of that. So right? It's a spread, which is beer put spread, but it's a expiries are different. Far month and near months expiries are used. So that way it's a calendar spread. This risk reward is probability of profit and risk reward is okay as long as you don't keep it to the last expiry day. It's a weekly expiry trade, and max profit is small, but you look at the margin that you're supposed to pay 20-25,000. You can take a trade and it's completely hedged. You don't know any like risk. The maximum you know what you lose. Right? So take the position size, increase the number of loads as per your capital size. Right? So that's the index play on the Nifty for the weekly expiry. Right? We have put current spread. Now that we analyzed the different global commodities, global markets, different sentiment indicators, volatilities, option interest, open interest data, all kinds of indicators on the momentum, volatility, trend, and all this. Now let's summarize and see what exactly happened last week. Last week was a kind of a breakout where the all-time high was created first time after a long 1 year, 13 months on the Nifty. Banknifty all done the previous. So it's a reconfirmation of the breakout from that resistance, trend line resistance that we have been talking about since long. So finally it has happened, it has done that. But last 2 days of last week were kind of small pullback. But the pullback is good because the market cannot go straight up like a vertical staircase. It cannot do that. So if it's a vertical move, then obviously it has to cool off. So that cool off also has happened Thursday, Friday last week. But is that enough? Could it go a little more down? Is it a possibility? We don't know. Unless it breaks the previous candle low, we don't know that. But good retracement has happened. There is change in polarity bounce zone that we have. There is a possibility that it can bounce up. There is also a possibility that it can further retrace a little more to the next support zone. So both is possible, right? But otherwise, the charts, if you see, it's mild bullish. Market view is what I have because trend momentum bullish, often is bullish. Institutional buying is there. Very good institutional buying. Weeks has cooled off below 14. Price pattern, everything is in favor of bullish. Morning demands are expanding upside. So there's no other view other than a mild bullish view is what I have on weekly basis. Right? Now, US markets we already analyzed a lot. It's a trend line resistance on the S&P 500 and the trend. We'll have to keep a close watch. If Dow Jones is able to sustain there, or is it going to consolidate there, or is it going to break out, and others have to follow. Is that happening or not? We'll have to see. Most times we are resilient, but sometimes most of the times most times we may not be that resilient to the mother market, right? But sometimes we may decouple and then show the resilience and all that, right? So we have to keep a close watch on the big moves that happen in the global markets, especially the US markets, right? So global news are not the great, even though the VIX has cooled off. The inflation worries, Fed interest rates worries locally and globally, and all this China or Taiwan, all this uncertainties is still there. And there you have to be cautious. Right? Good thing is that crude had cooled off last week. Last week it has actually spiked back a little, but still below the or near the 80 levels, which is okay. Rupee is still not cooled off really below the 80. That's a concern, but it is following the dollar cool off. Rupee currency, USD, NR currency pair also has gained a little bit. Not a currency pair, the rupee has gained a little bit. Some cool off has happened on the USD NR currency pair also. So levels to watch is 18,000, 18,100 that zone on the Nifty on the downside, and 41,500, 40,500 that zone on the Nifty. Similarly, upside 19,000 and 44,000. So that's the upside and downside levels of the Nifty and the Nifty. You have to keep a close watch on the week-to-week basis or the medium-term basis, right? So that's it. My view remains mild bullish, and what you can do is manage your risk. Using the option strategies, you can easily do that. A lot of videos on that. Look at the prices. Cash up with detailed videos there covered called how to invest using all these option strategies. Is already there. You can use that to protect your long-term quality stocks. At the same time, you can have a SIP kind of investments by using option strategies where you can get rental incomes, and all these possibilities are there. So options are not just used for trading. Can be used as a hedging also. So look at those videos and you'll understand how you can protect your investments with the help of options. It's another way of looking at options strategy other than the trading. When it comes to trading, make sure that you have the hedge strategies always whenever you are carrying over the portion overnight, so that you know what exactly you lose. Worst case scenario happens, right? Otherwise, you'll wipe out your capital next day before the market opens and before you can start doing anything. Your capital may be out. So that's something you have to be careful. So always hedge your positions, and that's it. Manage your risk, and so VIX is down. It's good time to play in the low volatility regime. Play it safe. manage your risk, have strict stop loss, and have risk defined strategies always. That's the best that you can do, right? So if this video has helped you in some way in framing your view for the next week in some way, if it has helped you in some way in analyzing the market, then please don't forget to subscribe, and please don't forget to share it to maximum, because we have very few subscribers and I appreciate it. I hope this a lot. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.